The numbers are in for 2025, and they are nothing we've seen in a quarter of a century. For the first time since the year 2000, home sales in the Greater Toronto Area at a generational low. We finished the year with an 11.2% drop from an already quiet 2024. While the headlines are screaming market crash, the reality on the ground here in the city of Toronto is a lot more complex than what you're being told. This is the reset everyone said they've been waiting for. But now that it's here, most buyers are too frozen to move forward. I'll show you why this dead market is actually the biggest opportunity for Toronto buyers in 2 decades. Let's take a look at the numbers. Okay, so here's the data for the Greater Toronto Area, and this is a report that is published on a monthly basis, and it's available to the public. If you Google Toronto Regional Real Estate Board Market Watch, it's out there for the public, and it's the same report that all of us can take a look at. So we'll start at a macro level. I'll discuss the Greater Toronto Area, then we'll get into the City of Toronto and the 416 area code only. So to start, the sales figures for December dropped by 8.9%. So you can see there 3697 versus 4056, so a drop of 8.9. And then the active listings, so supply was up 17.5. So when demand drops, which is sales, and then supply increases, naturally you would anticipate prices to come down, which they did. So the average price dropped by 5.1% to just over a million compared to December 2024. The other thing to expect when demand lowers and supply increases is the days it takes for a property to sell would go up. And that is the case. So you can see down here where it says PDOM, which is property days on market, up to 65 from 55 compared to December 2024. Now, the reason I like PDOM, not L stands for listing, the P for property. The property days on market takes into account the overall time frame. So if a property gets listed, for example, at 1.2 million, it doesn't sell, they cancel the listing, it gets at 1.1, and then it sells. That takes into account the total time it took to sell that specific property, not the one listing. So it's a more realistic reflection of market condition compared to the listing days on market. So again, that went up by 18.2% compared to December of 2024. This is something that I've put together and I found very interesting. And I went back 25 years and I wanted to compare when did we have such low sales? And I went as far back to year 2000. And this is when the population of the GTA was 4.8 million people compared to now, just over 7 million. So the population has grown by 45-46%, yet the sales level pretty much similar to what it was 25 years ago when we had 45% less people living in the GTA. So back then we had 58,000 sales, and this past year was 62,000. The other interesting part is the average home price in the GTA in 2000 was 243,000 compared to now, which is a million. So prices have quadrupled over those 25 years with the population growing by 45%, but sales figures kept pretty much flat. Now, this is a map that is published by the Toronto Regional Real Estate Board. And the reason I want to share this is the macro level numbers reflect, or I should say cover, all this region. So not just the city, but as it gets into Milton, Burlington, east to Clarington, and up to Innisfil and Lake Georgina. And this is why I always say in my videos, it is important to take a look at your local market. So even within the city of Toronto, specific pockets behave differently. So this is really important to have an understanding of the overall market, but sit down with your real estate agent and focus on your specific neighborhood, because neighborhoods function differently and the type of product does matter. So if it's a house versus a condo, and depending on the location and condition, those market conditions will vary. So keep that in mind when you hear the numbers in the media, which I'm sure will be all over because of the sales figure, which has been as low as the year 2000. Now, the other thing to keep in mind is because 2025 was the worst year in 25 years, moving forward, 2026 and probably 2027, anything referenced back. So the figures, because once they're published, they always reference the previous year. So January 2026 figures, when they come out, will reference January 2025. So we should see positive numbers moving forward into 2026 because 2025 was such a slow, low sales year. So keep that in mind moving forward into 2026. We should have more positive figures once those reports come out. Now, that's the macro level. Once we get into the city of Toronto, I track a couple things, three things: detached, semi-detached, and condos. And again, I don't put too much weight into December because it's a slow month. It's pretty much, around December 10, 12, market dies down because of the holiday season. So there isn't much activity happening in that specific month. So which is reflected here. You can see that detached properties in the city, 413 sales. And if you look at the other months, it's been pretty much active with the exception of February. Sales figures were higher. And again, not too much weight into the month of December. Active listings were down. Months of inventory is the active listings divided by sales, which gives 3.85. And again, here, 4 to 6 months is considered to be a balanced market. Below 4 months is considered seller's territory where you have bidding wars, houses sell pretty quickly. And then over 6 months is buyer's territory. So buyers can put in offers with conditions, take their time, negotiate the price and terms, and that's more favorable towards the buyers. So if you look at the detached house market in the city in 2025, it was pretty balanced. It was in the 4 months, it dipped a little bit under there, but pretty much in that 4-month region. So that is a balanced, healthy market where neither buyers or sellers are happy. It's pretty much a 50-50 split between the two negotiating parties. Now, moving to the semi-detached market, again, sales dropped, active listings down, months of inventory. If you look at the full year, that is pretty much seller's territory. And the reason is that is the affordable option for move-up buyers from the condo space who want to stay in the city and want to get a ground level type of housing. In the 416, the semi-detached market is the ideal space where those buyers move into, and they do sell fast. And again, because of affordability, believe it or not, for someone to stay in the city of Toronto. The other thing here is that I track is if you look down at the very bottom, the Bank of Canada cut interest rates 4 times, a full percentage point in 2025, yet really didn't make much of an impact on sales or average prices or median prices. They really didn't take off. And the reason is it's economic uncertainty. It's very simple. Rates have come down significantly, 9 times, cut by the Bank of Canada since July 2023, yet prices haven't appreciated because people are nervous about the economy. Canadians are nervous about what's happening down south with the negotiations that are up this summer of July 2026 with respect to the North American Free Trade Agreement. So that's really holding back people from moving forward with respect to their housing decisions. Last but not least is the condo market. And again, this is the media's favorite. It takes a lot of beating. You can see that sales were just under 700. Now, this is interesting. It's 1 month data, so I'm not putting too much weight, but I find this is interesting because, again, December is, call it a tale of 2 halves. We had almost 700 sales, which is pretty good if you look at the rest of the year. When you had 1,000 in July, 940, 1,072, 880. So for a month where pretty much 2 weeks are active, that is pretty good for the condo market, which has suffered a lot over the last few years. Now, how's that going to translate moving forward? We'll have to wait and see, but I still believe there's still more downward pressure on the condo market in the city of Toronto because the last batch of new construction completions will come to market this year. And after that, there's nothing new coming in the pipeline. So it'll take a while for the prices to stabilize, and then could be another 2 years or so where we start to see a slight appreciation in the condo space. The two groups who can take advantage of this market are first-time home buyers and move-up buyers who have outgrown their home. Here are 3 steps to take to be ready for your next move, whether you're a first-time buyer or a move-up buyer. 1. Sit down with a mortgage broker or a lender to get mortgage pre-qualification, not a rate hold. Pre-qualification is full underwriting. It only excludes the property details. 2. Sequence of operation. If you are a move-up buyer, sit down with your real estate agent to understand your local market, where your home is, and where you want to move to determine the best approach. Sell first, then buy, or buy, then sell. In 2025, I had these 2 different approaches for different properties depending on the neighborhoods. 3. Account for 3 to 5% of the purchase price for closing costs, which accounts for 2 land transfer taxes for the properties in the city, legal fees, adjustments, moving, and repairs. Also, make sure you have liquid funds for the deposit, as it is required within 24 hours of an accepted offer. I've put together a home buyer's checklist to walk you through the process, which you can download via the link in the description below. If you're new here, I help people navigate the Toronto real estate market. If you want the latest news and honest advice, hit the subscribe and like buttons so this information can get to more people. If you want help with your home selling or buying journey, reach out via the link in the description below. Thanks for watching, and I'll see you in the next video.